Everyone, how's it going? It's Derek. I was doing a few videos recording with my phone because I always say pocket option lags when I try to do screen recording, so it really hurts my entry points. So I just took a few trades not too long ago this morning. It was actually a beautiful market to do trades in, even though I do say to try to stick to when there's a higher market volume. Yeah, I think this just ended right here, just randomly. It is weird when these things just refresh like that. Anyway, so I just wanted to show you how to do. I don't know what to call it. I'm just going to call it the JetSpeed strategy because it's such a fast strategy. It's a 1 minute trade that you're going to be entering, so it's actually really quick to start making money. But the downside is if you're not careful, it's really quick to lose money. So I just really want to go over. I really just want to. I'm looking at all these. I'm looking at good trade entries. That's why I'm actually stopping. I just want to go over a few of the ground rules when you're using this strategy, and I'm going to show you the settings that I do. All right. So to use this strategy, what I use is the Keltner Channel. I use it at the default settings. I'll show you. So I use the EMA period of 20, ATR period of 10, the multiplier of 1. All right, and then for styles, you literally can do whatever style you want. I just keep it at default settings. Another thing to be careful with is when you're like doing the, I swear they do this on purpose, so you accidentally enter trades you don't want to enter. This is why I don't trade on my phone anymore, because I noticed when I was trading on my phone and I was trying to select pairs, a lot of times it would accidentally click me into pairs. So I'm actually going to get out of that now. Alright, so let me show you how this strategy works. Another thing you're going to do is you're going to add the Stochastic Oscillator, my tried and true, my favorite indicator, because it does so much. It shows you momentum, it shows you direction, it shows you oversold and overbought markets as well. It's amazing. Plus, you can use it like with the 50, I call it the 50-yard line, and it can actually help you do reversals that don't always necessarily go completely overbought or completely oversold. And I'm going to show you all of that today. Now, I have videos where I go over, like I take live trades. I really would love to do live trades like on the big screen, but because it really lags, and to be honest with you, pocket option just lags on its own. I notice I'll lose trades because I'll enter, say, down here, and it will enter my trade up here, and then I'll end up losing. But I do want to show you how the strategy works. So again, I don't want to make this video too long. All right, so the Keltner Channel settings are 20 and 10. The Stochastic Oscillator default settings are 14, 3, and 3. I make the lines a little thicker so you can see them a little easier sometimes. Yeah, you can make them thicker, 2 pixels each if you want. Okay? And also, this indicator here is called the RSI. Alright? I keep RSI on default settings of 14. Okay, so this is how it works. This is similar to the main strategy that you guys learned from me, zero gravity mode, or I also call it the momentum shift strategy. It's very similar to it because it's a reversal strategy. You're looking for overbought markets, oversold markets with the Keltner Channel, and you're going to wait to see that they're overbought in Stochastic Oscillator or oversold in Stochastic Oscillator. The same principle does apply, right? So right here, it actually looks like it's setting up to be a really strong reversal. But something else that I've added is actually, see, it's lagging. I would have entered up there, but like I said, I called it. I told you guys it's about to be a good reversal, which it was. But the next indicator that I want you to use, it's called the RSI. All right, and the RSI is really cool because it not only shows you oversold, overbought markets, but see how 80. All right, so pretty much whenever the lines are above 80 in Stochastic Oscillator, that means we're in an overbought market, and when the lines in Stochastic Oscillator are below the 20, that means we're in an overbought market, right? Sorry, an oversold market, right? Right, so that same principle does apply to the RSI, But the even cooler thing about the RSI is the RSI actually acts more of a support and resistance analyzer. So when you see the line in RSI hit the 70, that means that you're hitting the resistance. And when you see the line hit 30, that means you're hitting support. And you can even see, I'll even show you, see how it hits the 30, it spring yards up, and then, you know, springs up, and then you see it hits the 70 and it bounces back down. Now, this method, it not only works in ranged markets, but it also can work in uptrends and downtrends, and I am going to show you how. All right. Now, another way to make sure that you're getting a good entry, I always say look for the really fat distance between the two lines in the stochastic oscillator, and wait for a nice bend, and that's a good sign that the price is going to reverse. Also, make sure you're in oversold or overbought, whatever the respective market is. Okay, but a really cool thing I want you all to learn is something called price action. Now, price action is pretty much like learning candlestick patterns. I've gone over it a little bit in the videos where I take my live trades. Again, it's really hard for me to take live trades and analyze it and explain it all for you and still win the trade, because especially with a method like this, every pipette counts, because this is a 1 minute strategy and candles are moving, they're bouncing up and down, right? So now that I'm not taking any trades and I'm just showing you analytics of it all, I can really break this down. So price action is something that's extremely important, and it's what's going to separate winning the strategy 60% of the time versus 80% of the time. All right, so the really cool thing I want you to see is when you look at, again, make sure that the lines in RSI are going to the support or resistance. I've gone over that. When it goes to 70, that means it's at support. Sorry, it's at 70, that means it's at resistance. You can start doing a put position. If it's at the 20, so if it's at the 30, that means it's at the support, and you can do a call position. Sorry, it's just lagging and it's just driving me crazy. All right, anyway, so like I said, all right, I'm just going to go over the rules again. Keltner channel, when you see the candles above, that means you're in an over bought market. Start looking for a put position. Also, when you're doing that put position, make sure that you're in over bought market with the stochastic oscillator, and make sure that you're hitting the resistance level in RSI. And you're not always, because again, you could always have breakouts, but look for a put position there. It's most likely going to win in your favor. Now, the settings for this is going to be 30-second candles and 1 minute trades, which means this method is going to be going really fast. It's a very rapid strategy that you could do. As you become more proficient in it, you could actually do multiple entries. All right, so let me show you. Okay, so you see right here, we're entering a nice, it's still a downtrend that we're slightly in, but it's still kind of a consolidated type of thing going on. It's a consolidated market, right? So you can see this green candle went above the Keltner channel. You can see stochastic oscillators in an overbought position, and you can see the RSI is hitting the resistance level. But another thing I want you to look for is price action, because like I said, price action is something that's going to separate someone who has experience, is able to recognize a fake out about to happen, versus someone who can, add another level of confirmation to their trades. So you can see right here where there's a long wick at the top of the candle. That's typically a sign that the market's about to reverse, because that means this candle went all the way up here, but then it closed all the way down here, which means there's downward momentum and there's more of a selling pressure, and the buying pressure is starting to go down. That's why it's called price action. All right, and price action is really cool because while the indicators lag, price action is live. You're seeing price action as it happens. All right, so you could see right here the long candle wick. All right, another long candle wick happened right here with the bearish candle, and then boom, you won your position. Likewise, you can see a long candle down here at the bottom of this red candle, and it's coinciding with the stochastic oscillator starting to become oversold, and it also coincides with the RSI. It didn't quite hit the 30, but you can start to see it start to flatten out. That's typically a sign that the momentum is getting ready to reverse. So then, boom, you win your position. Right here is not too long of a candle, but you still have the other, you still have the crossover, you still have the RSI, getting close to the resistance level, right? And boom, you won your position. Right here is another telltale sign. You see this really long candle right here. So this really long wick right here at the bottom, and boom, it reverses. You won your position. Now, another thing that I want you to know is you can see right here, you start to see this long wick right here. Like I said, nothing is ever 100%, but you can see most times where it reverses, you see a really long wick. Long wick. It's a short wick there. Long wick. Long wick. Let me just go here a little bit. You can see some long wicks right here. The price is most likely about to reverse. As you can see, it's starting to reverse now. All right, so long wicks typically let you know. You can, especially when you see two long wicks right here, like of opposite colors. That's what's known as a tweezer bottom. If this was a little longer, it would be considered a tweezer top. So always look out for those as well. That's what's going to help you out when you're doing the strategy. Now, right here, it could have been a reversal. All signs could have pointed to it becoming one. Let me analyze this just a little bit right here. Yeah, but as you can see, there's no support or resistance right there. I was trying to see if maybe there was like sometimes you get like little small support and resistance levels, but there's none there. So it was just going to keep falling down until it hit right here, which is the support level. And it also coincides right here. Now, that's how you can do this strategy in a range market, consolidated market. It's very similar to the zero gravity method or the momentum shift. So it's very similar. Again, you see the long wicks, telltale sign. That's just a little bit of the price action side. It's a little bit more advanced, but if you combine price action, with the indicators, you're going to be a lot more, precise. So with a method like this, you're really trying to snipe. But I do want to show you how you can enter multiple times. I've gone live on Facebook. Check my Facebook. I've been doing live videos, taking live trades, and I've been explaining it. And of course, you can check the videos out on the website. A cool way that you could use this strategy to do multiple entries is something like this. Let's say you see the market's getting ready to reverse. You enter here, right? Remember, these are 30-second candles each. So you enter here, right? And it goes up. The next it closes. This candle here closes up, but you still have 30 seconds left on the clock. What you can do is do another entry here and do another entry here. And what's going to happen is you're going to win those two entries. You might lose this first one, but you'll end up winning the two. A lot of times in this strategy, if you're really good at sniping and entry points, you could get up to 2 to 3 entries and actually win. Or you can win 2 out of the 3. That's what makes this strategy really profitable. All right, see right here? You can enter here. You think, okay, it's going oversold a little bit, but you miss it. Not that you miss it, but the trend continues going down, and then you enter here because you see the crossover starting to happen right there, right? And then you see the long wick here starting, and then boom, you won 2 positions. And if you enter here, guess what? You can, let's say you enter here, right? And then you enter here because you see it's going to reverse. You enter at the bottom of the Keltner channel, all right? And then you see it goes down a little bit, it closes here, but then you enter here, all right? It's going to close here. You might actually see that you actually got a return for your first entry and you won your second 2 entries. With this strategy, you're going to get a lot of returns, and the reason is because, especially if you're doing it in a low volume market, like let's say you're doing it really early in the morning or really late in the afternoon, Eastern Standard Time, let's say 5 a.m. Eastern Standard Time, and you're doing it at like 4:30 p.m. Eastern Standard Time, what you're going to see is you're going to get a lot of returns because the price, because there's not that much market volume, the price is probably going to keep, volleying. It's no different than when you're trading spikes. It's going to keep volleying back down to the support and or resistance level, whichever it is. So a lot of times you're going to see a lot of returns, just for that reason, because price likes to hang out and sit on the support or resistance level. So you're going to get a lot of times, especially when the market has low volatility, extremely low volatility, or extremely low, pretty much low market volume. You can see the price, so you enter here. Again, it's really lagging. I don't know why it does that. You enter here, and the price, it just keeps, going down. I can actually show you a few. Like something like this. You see this? This candle closed here. This candle closed here. This candle closed here, and this candle finally went up. But it's something that you're going to see a lot. And that's why I really don't suggest doing this method in low market volume, because all it takes is one pipette and you lose, or one pipette and you win. But still, do you want to risk it? It's all up to you. It depends on your risk tolerance. But I do want to show you how you can do this strategy in an uptrend or a downtrend. And in my opinion, I think it's a little bit more accurate when you're doing it in an uptrend or a downtrend. So I always talk about the surfing, right? The candles surfing along the coast of the Keltner Channel. All right, a really cool thing you can do, again, it works a lot better when you have more market volume, is you can trade the reversals with the trend. Not against the trend, but with the trend. Meaning, if you see something like this where the candles are constantly surfing down, that means you're only going to enter for a reverse when you see a strong green candle obviously going up in the opposite direction, and then you can actually enter then. So let me show you what I mean. Okay, so the way you could use this strategy in a long-standing downtrend is like this. All right, so before I talked about how you'd enter like in a standard, sine wave market, the typical consolidated market is you'd either wait for it to hit 70. Of course, all the other indicators are hitting the way I always explain it, right? But then you have the additional bonus of waiting for the RSI to, say, hit 70, and you can do a put position. Now, when you're in a long-standing uptrend, you can see that the line, it doesn't typically hit the 70 or the 30. It's either going to hit the 30 and the 50, or the 70 and the 50. So if you see it's hitting the 30 and the 50, and it's not really going above the 50, that means that you're in, I think it's doing this because, I think the reason why it's resetting is because the market, I don't know, actually, I think it's resetting. I think the screen's refreshing because of the price changing. That's what it is. Okay. Let me get to this. Okay. So sorry. It just like took me away. Like I was saying, when you're in a downtrend, you'll see that the green line, it doesn't typically go too far above the 50-yard line. That's what I call it, the 50-yard line. It usually will just go to the 50 or the 30, or below the 30 even. But you're never really going to see it go to the 70 when you're in a downtrend. And the flip side is true for the opposite. When you're in a consistent uptrend, I think the candles are actually surfing in the opposite direction a little bit before here. Let me see. I think this is an uptrend starting right here. Just looking at the candles naked, I think they look like an uptrend, a strong uptrend right here. I don't know if they're surfing. Yeah, they're not surfing above. All right, let me just keep it here. All right, so you can see the candles consistently surfing down, and like I said, I guess it's good that it's good that it kept resetting, because then I could repeat it a little slower, so maybe you guys can see it now a little bit easier because I'm showing you in different areas. So you can see right here, it's hitting the 50, and then it's bouncing back down to the 30, and then it's going to bounce back up to the 50, back down, because we're in a consistent downtrend. All right, so what I've been doing when I see these, surfing candles is there was a time I hated looking at them, but now I love looking at them because when you're in a really strong trend, you're more likely to win your trades than if you're consolidated market, because consolidated markets, they don't last that long and they're a little bit more unpredictable, and they're more rare. Because they're so rare, it's a lot harder to get good entries. But me teaching you this is going to, like, you're going to literally have 3 times as many entry points as you did before just doing strictly in a consolidated market. All right, so the Keltner channel also has a 50-yard line. So when you see that you're in a consistent downtrend, what you're going to do is you're going to, the same way I said to look for long wicks in the opposite direction, like if you're looking for a put position, to look for long wicks up, it's the same principles going to apply, but instead of doing it at the top of the stochastic oscillator, sorry, at the top of the Keltner channel, you're going to do it in the 50-yard line of the Keltner channel instead. So what you'll see right here, you see these long wicks right here. All right, what you're going to do is you're going to see the long wicks, which means a reversal is about to happen. Also, you're going to again look for a sharp turn in stochastic oscillator, and this turn is going to also be happening around the either the 30 to 60-yard line in the stochastic oscillator, and you're going to see a sharp bend, and you're going to see the RSI go a little bit above the 50. And when you see it go a little bit above the 50, and then it starts to make like a little small point, that means that the price is about to reverse back down, and it's reversing with the trend, as you could see, which is awesome. See that? All right. And then you can see, because it's reversing with the trend, you're going to get more green candles. When it's reversing back up green, it doesn't last as long. But because it's reversing in a downtrend, there's a lot more leeway for your entry point. Let's say you don't enter here, or you enter here. You're still likely to win your trade if you enter there. All right, so I do want to show you the opposite, but the same. See how the same principle applies? I do want to show you in other scenarios. Let me see. Now, something like this where it's still consistently below, I wouldn't enter there, but I definitely would enter once it gets a little bit back into the Keltner channel, and you see it hits the 50 in the Keltner, and then it hits the 50 in RSI. Typically, I wouldn't enter any trades below, unless you just want to trade with the trend, blindly. I still would not do that. It's just a little bit too unpredictable for me. But when you're trading like the retracements or whatever they call them, the retracts, people call it different things. I just say retracements. When I see retracements in a long-standing downtrend, that's when I'm going to enter. Like you even see right here, it hits the 50-yard line in the Keltner channel, and then it hits the 50-yard line in the RSI, makes a sharp turn, and then boom, you win your trade. Same principle here. Boom, you win your trade. All right? So that's how you do it in a trending market. If I could find a nice uptrend, I'll show you as well. Let me see. I was just trading a little while ago live. I think it was CAD USD. Oh, EuroCAD had a nice uptrend, maybe a half hour ago. Just looking at these indicators, it looks like it's about to trend up. As you can see, this is what happens when I record my screen. This is what happens when I record my screen while I'm in pocket option. I don't know why pocket options like that. It's weird. That's probably the reason why most traders don't use pocket option when they're teaching. Let me see. Long-standing uptrend, as you can see, this one's actually a much nicer, because there's a little bit more movement in the candles. It's actually a lot easier to illustrate how this works. So let me show you. All right, see this? We're in a long-standing uptrend. See, the price is kind of just meandering around the 50. It's not going below the 50 in the Keltner channel, which means we're in a very strong uptrend. So if I were to enter any trades, I would literally only enter put positions. And then again, you can get down below, but what you're going to see is we're beginning a very strong uptrend. See how we're surfing along the Keltner Channel, surfing along the coast. All right, so what I would do is, let me show you. I'm going to zoom in a little bit. I just wanted to show you in full context, and then I'm going to show you what to do when you see the candles surfing along the coast. Okay, so let me show you. This is a picture-perfect example right here. The red candles, we're getting ready to reverse back up. You see the red candle right here. It enters the 50-yard line in the Keltner Channel, and you see a wick at the bottom of this green candle here, which is a good sign. That's price action, a good sign that the price is about to reverse back up. Also, you can see there's a big distance between the blue and the magenta lines in Stochastic Oscillator, and you can see the lines are actually crossing at the 50-yard line in Stochastic Oscillator because we're in a strong uptrend. If we were in a downtrend, the lines would be crossing at the 50-yard, but it'd be crossing down here. Instead of going upwards, they'd be crossing, they'd be doing an arch instead of like a U shape. So you can see right here, the lines cross over, and then boom, you won your position. You could also see that the line in the RSI hit the 50-yard line, which is a good sign, and it started flattening out. And then, sorry, not flattening out. It started making a sharp, a bit of a turn of a V shape here, which again is a good sign that the price is about to reverse back up. All right, and then you can still see that it will eventually reverse back down. Personally, I would not do any put positions here because you can see something like this. You can end up losing. Here, lose. But if you do call positions at the 50-yard line, you can begin to see how you can be a lot more effective and win more trades. Like I said, this strategy is one thing, but it's another thing to be able to actually look at the market with, using the strategy, just learning the different patterns. It's going to become second nature to you all. I'm telling you. You can see the crossover here, see the crossover here. You can also see, a long wick at the bottom. Then you see a long wick at the top. But then you see another long wick at the bottom. So the momentum's going upward. Also, you can see the price did a sharp turn at the 50. See that? 50-yard line. So when you're in a trend, just to simplify it, in fact, what I'm going to do is I'm actually going to use these pictures. Actually, I can't. I'm recording. But I'm going to use these particular parts of the chart for the PDF that I'm going to create for this strategy. But you can see just how more effective it is, because I notice a lot of times, people, when you guys DM me and you lose, you're like, oh man, I lost. And I see that you're doing put positions when you're in a long-standing uptrend like this. But once you start to do call positions at the 50-yard line, once the candles start to hit the 50-yard line in Keltner Channel, and once the Stochastic Oscillator starts its crossover process, when it starts to do a sharper turn at the 50-yard line, and once the RSI, it goes a little bit below the 50-yard line, then makes a sharp curve back up, when it starts to meander around there, and then it starts to make a sharp curve back up at the 50-yard line RSI, you could see how quickly and how quickly you can become more effective at sniping these trades out. As you can see, it's long-standing uptrend here, hits the 50-yard line, does a reversal. See the candle? Boom. Sharp turn here? Boom. Sharp turn here? Boom. Same principle applies when you're in a downtrend. But I do want to show you one more time. I really wish I could enter a trade. I just know it's going to lag way too much. The risk's not worth it when I'm screen recording. Like right here would be a really not there. That screen kind of wasn't fully loaded. Once I saw how low it was being low, like something like this, really strong uptrend. Everything's not even loaded yet, but see this really strong uptrend. I would not do any put positions. I would just wait patiently wait for the candles to hit this 50-yard line, and then wait to see if there's going to be some type of crossover, and then you can enter. If there's doesn't indicate that there's going to be any crossover, that means that the price might sink all the way down to the bottom of the Keltner channel. So don't. But that's why it's really important just to see the type of market it's been. If you see that the price is constantly reversing at the 50-yard line, that's a good sign that it's going to reverse at the 50-yard line again. So right here, it's just like staying on the 70. So something like this, I'm telling you, just don't enter. If it looks like this, if it's at the 70 and it's just kind of chilling at the 70, unless you're really good at reading the price action, and let's say something like this happens, no, just don't do it. Just don't do it. Just wait until it hits the 50s, like something like this. Something like this. It hits the 50. Hits the 50. You see a long wick at the bottom. Price is going to reverse. Boom. See this right here? A long wick at the bottom at the 50s. See that? 2 long wicks in a row. Boom. Long wick, boom, reverses. Just do it like that, and you're going to be able to increase your accuracy. All right, I hope that explains everything. I am going to make a PDF to make it a lot more concise. Check out, I've been making so many videos placing live trades. Unfortunately, I've been doing it on my phone, which sucks. I am so sorry. But seeing the live trades, getting the hang of it, make sure that you let the trades, wait for the trades, wait for the trades to come to you, because otherwise, the worst thing that can happen is, you want to enter here, and it's there, but then you enter, but it doesn't register your click until it's all the way up here. That is the worst thing. I can't stand when that happens. But yeah, that's all, guys. I'm gonna leave that PDF so it's a lot easier to understand. Have a great day. Talk to you later. Ciao.